trade with Tim Bigham, option strategist at Buy Alert. Tell me your trade here. How would you go about looking at this name?
Yeah, absolutely, Nicole. And as you were talking about, little brother has been beating big brother NVIDIA in a big way, at least so far this year, outpacing NVIDIA's very nice gain by well over 10% here. I think the stock will absolutely have to prove it on earnings here. It'll have to be a big beat to kind of justify this kind of red-hot rally we've seen here. So I'm just cautiously looking for a pullback of some sorts, not a big one in any way, shape, or form. AMD, believe it or not, has been above the 20-day moving average every day since last earnings report, which is one of the longest stretches in history. So I'm just looking for the stock to kind of act how Microsoft and some of the other big names did, where it's a sell the news sort of scenario here and a slight pullback towards that 20-day moving average, towards the market maker implied downside move of around 7%. It's what the options are saying. So I'm just going out buying next week's slightly out of the money 160 put, selling this week's 160 put, paying about 75 cents for that, capturing a very nice term structure of vol edge here, selling over 100 IV this week, hedging with under a 70. So, define risk all the way, and really just looking for the stock to maybe give back some of the gains we've seen over the past quarter or so, and maybe at some point come back towards that 20-day moving average. So be interesting to see how AMD reacts to earnings, and then ultimately how NVIDIA, which I think may be the last, big name, obviously, to report, reacts as well.
Right. And look, I was talking about so many of the other names in the group. NVIDIA, obviously, always in focus, the leader of the group, the clear winner, and Jensen Huang's the visionary there. But Lisa Su, certainly a lot to be respected when it comes to AMD. But so many of these other names that have gotten moved around, I would say, some in good ways, some in bad ways when it comes to tariffs. And that has been the wild card of the market overall, though the market is really now trying to shake off the tariff talk and move forward and look more at the AI revolution, look more at the, reignition of manufacturing and things like that. Is that right?
Yeah, absolutely. To quote Alfred E. Newman, for those old enough to remember, what me worry, right, about the tariffs, which not too long ago were the biggest concern in early April. Now they're somewhat forgotten about. They will have an effect, certainly not the big effect that everyone was freaking out about not too long ago, but they will provide a drag here. Certainly AI is going to continue to build out, but as you were talking about, just how do you monetize this going forward is the real trillion-dollar question, let's call it. Be interesting to see, but AMD valuations now getting stretched like every other stock out there. People are kind of poo-pooing valuations and everything, getting a little blinded by the AI mantra. I think at some point that will come home to roost, and it probably will be after earnings for most of the companies, similar to what we saw in Microsoft, right, where the stock opened up big but ended up pulling back sharply. Same thing I expect out of AMD and all these AI-related names.
Sure. As I look here at the S&P 500 now, we were talking about the resistance levels of 63.80. We even have many pros on Wall Street with price targets higher than where we are now, some of which are at 6,600 by the year end. We've seen the S&P 500, let's say, up about 7%, the Mag 7 group up 27%. So 20 points higher. If you weren't part of the tech play and the AI revolution or boom or whatever you want to call it, you missed it. Do you think these 6,600 level targets seem to be doable between now and the end of the year?
Part of me says yes, part of me says no. My old kind of trader mentality says absolutely not. We're looking at the S&P trading at still well over 3 times price to sales, by far the highest level ever, right? So valuations absolutely through the roof here. But we're seeing just continued, kind of grind higher. We finally traded below the 20-day moving average for 1 day on the S&P 500. We're back above it. So it'll be interesting to see here. Is it doable? Yeah. Is it feasible to stay there once we get there? That's really the question I think that's important.
Okay. Look, right now we're at 63.18. Our own Kevin Green talked about the resistance at 63.80. But if you get that Fed rate cut that folks are now counting on, that would be a big deal here if we were to get that in September. And there's more of a likelihood that we'll get that cut now after that jobs report where we saw the revision of the 2 months, 258,000 fewer jobs in the last couple of months. So obviously tepid, as the president described it. We'll leave it there. Tim Bigham of Buy Alerts, thank you so much. It's great to see you.